Okay, good evening. Here is another nightly recap video. And yeah, hope everyone is having a good weekend. So tonight I'm going to speak on a few things actually. And I think the first one is on the potential market shutdown. So what's going on here? Pardon me. So I think so far there is a high probability that there is going to be a potential market shutdown. I'll probably say about 75% probability of a US government shutdown, not the market, US government shutdown, which starts in October. We do have just about 2 days to the end of September. I hope everyone's had a great trading month. Again, September it tends to be fairly bearish, but this is a different September. It's just, market's been on a huge magic ride of the stairs. So timing is very essential. But apparently right now, I think the timing is bad because there's quite a few coincidences with, we have a few key market economic data released, jobs report, the CPI, which the market is eagerly awaiting or waiting for. So I think the timing here is pretty crucial. Again, there are data delays as a result of this, or there will be data delays as a result of the shutdown. And of course, we know the Fed. What does it say? We always have to look at the data. And that means there will be a Fed uncertainty regarding, the rates because they depend on that before they make their decisions. So that's actually very crucial in terms of what they will have to do. So hence the timing of this market showdown really matters a lot. So that's another one. The next one here, which I'm trying to talk about, is without fresh data, the Fed they will be flying blind, full stop. So it could affect expectation around the future rate cuts, which many people are expecting. I think personally, based on what we're getting, I don't think there should be a rate cut, but we shall see. Powell says he's always constantly talking about being data dependent, and the data is actually not proving that we should get another rate cut. Simple, but we'll see. Another one is now we are, if you look at stocks, they are, especially very high. I think the 2024, 2025 market has been driven by AI and tech mostly, really. And they've already been seen by many analysts as being fairly highly valued. Even Powell broke one of his key to wasn't going to call it a promise, but his key ritual of not commenting on the market. But he did say the market is fairly valued last week. Also, a shutdown would amplify the risk because when sentiment is stretched, it doesn't take much bad news to trigger volatility. And I don't think people like volatility, even though it's an opportunity for quite a lot of people. But if you know how to play both ways, we know the market goes up, it goes down. If you know how to play both ways, then of course your job is to manage what's coming at play. Also, I'm thinking I'm seeing quite a few sector rotation, and of course, I think one of the key ways to play this is to be defensive. I always talk about people playing defense. So there's some investors that are rotating out of high flying tech names and going into more defensive sectors. Energy is one, for example, just as a way to hedge their investments. So we've got to monitor sectors which is less exposed to government shutdown risk, utilities, staples, non-discretionary. You will need these things on a daily basis. Just one of the ways to hedge. Also, you got to monitor stocks which has less exposure to government shutdown, which I've just been talking about. Again, volatility will be likely. This is one of the key risks of this. And the short-term volatility is very likely, not because the market's fundamentally broken, but because uncertainty. Market does not like uncertainty. We talk about this all the time. Positioning near quarter end and the funds reviewing their books will make this even more real because we are now moving into Q4, the last quarter of the year. Isn't it amazing? Oh, wow. In 3 months, everyone's going to be saying congratulations and Happy New Year, 2027 or 26. Getting ahead of myself right there. So what should you work closely? Keep an eye on the comments from the Fed officials. Do not fight the Fed. Full stop. How reliant are they on the upcoming data? Are they bearish? Are they bullish? Or dovish or hawkish, whichever way. Watch for moves in treasury yields as well, which is very key. Expected rate cut pricing might shift if economic data is delayed. You've got to monitor congressional developments or stopgap funding bills. Political headlines could move markets fast. I think the Trump market is one that moves the markets. Mindset and risk management is very crucial. So do not chase fear. Don't ignore it either, because like I think, like I said in one of the recaps a couple of days ago, volatility is needed in this market. It just makes the world fun. People tend to run away from volatility, but you need it. Three things again: market works, volatility, sorry, market works, price matters, and of course the third one is diversification is your body. Full stop. Okay. And use smaller position sizes again, because you don't know, you're quite uncertain. And if you're trading, use very tight stop loss, and you've got to favor setups with very much defined risk. I was going to talk about three things. So that's that one on the market shutdown, or on the government shutdown. The second one is, now, the key thing is, now it looks like AI hype is starting to fade on Wall Street. And I'll show you a few things I am seeing. I think the AI hype is beginning to fade. Is it a hype? Is it a bubble? I'll leave that for you to decide. But what am I looking at? So number one, I think analysts are growing more skeptical about AI's ability to deliver on sky high expectation. We're looking at names like Nvidia; they're beginning to stagnate, and AI ETFs looking overbought. Where there are signs that optimism may be getting to the peak. Hey, how much more have they got to go? We shall see. And I think last week we could see the market kind of rotated into rare earth and minerals. Again, you got the debt and circular financing risk, which is another key insight right here. Oracle big bond deal to fund its AI work with open AI. It's kind of raised eyebrows. I think people are saying the math is not mathing. The more debt, more risk, and it looks very impressive. But when you look through the hood, it doesn't look as impressive as it is. So there's concern that markets or companies are borrowing heavily to build data centers, which may lead to underused or unprofitable assets. And that it's not great at all. I think there's a name that it's called. It's going to come to me in a minute. There's infrastructure and resource constraints as well. So building out data centers requires enormous power. Energy constraints could choke future growth. Here we're looking at oversupply, and some experts are warning of, there you go, stranded assets, which is what I'm thinking. So if infrastructure investment overshoots the demand, then we will be looking at stranded assets, which just cost a lot of money to build. Then we're talking about valuations which are extreme and concentrated as well. Much of the S&P 500 gains, they come from quite a handful of AI names, and other sectors are being left behind. So this bull is not actually is not market wide. I think it's a bit concentrated to certain areas, and you do get the odd pick and choose sometimes, which just runs. So also overbought technical indicators are showing they're overbought. People look at RSI, for example. The AI ETF suggests stretch valuations. I'm going to talk about some stocks in a minute as well, or whatever I'm watching for the week. Finally, the potential triggers for a pullback, which have been, I don't know when it might happen, but I know it will happen. As good as the sun's going to shine tomorrow, right? The weak profit growth, slower than expected profit monetization, rising competition, especially from China. China has actually been saying, I think they said in the next 5 years, if I'm right, they want to build their own Nvidia. And I know when China wants to get things done, hey, and of course they're looking at less reliance on Nvidia as well. Regulatory concerns could trigger a correction as well. These are the key things to pay attention to. Investor fatigue and shifting sentiment could lead to a rotation away from pure AI themes into more stable sectors. So we don't necessarily have to pull back for a general market-wide pullback. But I think some sectors are being left behind, and market might pull to those areas. So you got a few strategy and risk management tips, and then I'm just going to go into the charts. So reduce exposure to the most speculative AI names. If you are long and considering, I would recommend you consider taking profit or scale down risk. Focus on AI names with strong cash flows, low debt, and diversified exposure. I think one of my key risks for Nvidia, for example, their key major customers is just about 5. Look, anything can change at any time. Watch for data or earning reports in the next few weeks. It may illuminate how much real revenue AI is producing. We I've been seeing quite a few comparison with the dot com era, but right now people are saying we've still got a lot more to go. Hey, history repeats, but it doesn't rhyme. That's what they say. So be able to use your key technical indicators and spot overstretched setups. Have a hedging plan or cash buffer in case sentiments shift sharply as well. So on that note, so I'm gonna share my screen, but all I'm trying to say is that the fervor around AI may be cooling. I'm not saying it is, it may be cooling, and I'm not saying it's dying. Become more discerning, okay? As a trader or investor, now's the time to shift from the chase of hype to the discipline of fundamentals, cash flow, and valuation. Look, valuation matters, especially when the market is bearish or when the tide turns. So valuation matters. But when everything is bullish, look, valuation doesn't matter. So you've got to be careful. Now, let's look at the charts. Let's look at a few names and see what we are looking at for the week. Amazing. The Qs. So I've always had this there. And again, I've got this number right here. So first thing I'm just going to say is if you look right here at the Qs, we had, I think last week was the first time we had a down day in or a down week in many weeks. You know, we still closed on a high, but last week wasn't great, or the end of last week. We're not exactly calling for the end of the world, but look, it's the tide is turning all over again. So I think the key number here for the Qs is should I say is six should I? No, 59596 actually. So 596 is the key number here. And of course, looking at the SPY as well, I think the key number for SPY has been 668. So this is the number we're looking at. If you can beat 668, I think that sets us up for the week. So 668 level. Again, speaking of the AI cooling, so it looks like we might just have great start to the week again, or good start to the week. AI cooling. If I'm just gonna look at the AI ETF, look, based on what I can see here on the weekly, there's a huge digestion happening right there at the top. And is it time to cool off? I don't know. But based on what I see, you only have to trade what you can see. Okay. This is not me adding money at this point. You know, regardless of what people are saying, I personally think it's time to hedge basically and that's what I would recommend you do. But again, not financial advice. Nothing I say in this program is financial advice. It's up to you how you manage it, just the way I am managing it. But looking at a few positions this week, this jumped out of the computer to me. Hims, my God. Okay, so I think Hims is one here. Looking at this, so if I'm looking at the way it's been playing so far, Hims has actually had a few consolidation, and now I expect a bullish level. So that's one. MSTR, I've been seeing quite a lot here. I remember ICANN did lace the short and it's just never recovered. But right now, it looks like, it's beginning to say, look, we are trying to get back and the tide might just be turning. So I'm looking at Mistar as well. I am looking at Tesla is one. Amazing Tesla. Tesla right here, 445. And been a huge inflow, money flow from institutions. And I am seeing this bold call, 500. So there's a huge 500 I'm seeing for Tesla. So never bet against this one right now. There's a huge, it's not really done so much this year, but look, over the last few weeks, it's just more or less doubled. So Tesla is another one I'm looking at. Now on the forex side, my major focus is it's the GU. So the GU wasn't they didn't had a it didn't have really have much of a great week last week, but it looks like it closed right back. So it didn't exactly collapse. So we're looking at this level for GU and we'll see how GU plays. And like I said again, GU will decide or will work on the dollar as well. So I'm looking at that and also my key bread and butter, which is my commodity, cocoa, before I close. So Coco again also kind of fell into labor and it did not just play ball last week. So again, looking at this key level for Coco, We shall see how it goes. And finally, my lovely, lovely bread and butter right here as well is the crude oil. I've got this line in here for years, and sometimes people say they buy low, they sell high. For me, I buy low, I sell high. I buy high, I sell higher, and sometimes I sell high and buy low, full stop. But again, I'm waiting for key level to be crossed. And if it breaks these, then we can put on the trade. But we're watching this. I think we've been bullish on this since 60s anyway, 60, 62 level. So we are right there, profitable. So that's one here. So um, one last thing I'm just going to say is that it's very, very easy to get stuck doing the wrong things repeatedly. But you just need time to break the chain. Actions are a very true essence of our purpose. So if you've been looking at trying to understand how the market works and you're not doing it, you've got to give it a go. Actions. People say knowledge is power, but I love what I heard from Tony Robbins before I started this market today, this presentation. Tony Robbins said, knowledge is not power, it's potential power. It's actually your action. That's the power. That's what gives you the results. So if you are not, if you don't believe in this or you don't have the understanding, you've got to give it a go. Give it a go. Give us a shout or just try, and that's the only way you get better. So knowledge is potential power. Action is what will give you the result. On that note, again, finally, like I said, three key things: markets work, cost matter, and diversification is your body. Have a good week, everyone. Two more trading days to the year. Sorry, to September. Two more trading days.